Let's get into gold, folks, because gold is a hot topic. A lot of people trade it. I love to trade it. I day trade it. I swing trade it, and I buy real physical assets in metals. So right now, it's been the story for, better part of a month. 4,000 has. And we bought 4,000 and I called the trade clear to 4,400, which was phenomenal. I called the buy at 4,000 to 4,100. I called 4,100 to 4,200 on intraday trades I'm sorry, intra-week trades for my group successfully. But one thing we want to notice is that if this breaks, we're going to see 3,300 to 3,500 where this strong consolidation is. I'm not saying it's going to break. I mean, we're hanging by a thread. I will admit that. But this little buy side spike here with volume was a good look. Now we do have a death cross, right? So this is not good look for gold. The fact that the 50 has crossed the 28, we have now entered a bearish period in gold. But supporting this level is decreased news coming out in CPI and PPI that the inflation risks are less, right? So we have some diverging catalysts. So how would you trade this? I think with the close, again, with the concern that we have more downside, and I believe we test this level at some point, we may be able to buy at the price it's at 4,000 to 4,025, and you could have a very tight stop loss at like you could have it just on the other side at like 39.75, or if you want to go a little bit wider, like 39.50, and try to realize 100 to 200 points of profit out of that. And then if we get another negative catalyst that pushes it down, we've only realized 25 to 50 points of loss where we'll start really sizing in large down here. And guys, it won't be a straight line. There'll be some support at 3,700, 3,800, 3,600 where you'll see some bounces. But down here, I'm predicting the future that this will be one of the strongest buys we can make in gold. But prior to that, we're going to have the opportunity to take short-term profit on smaller trades that we can then roll those profits into a very large trade down here. So don't sleep on gold. Commiserate with that. If this holds, ego is kind of barely hanging on to its buy zone, lower buy zone at 23 to 24 if price falls. But buying miners, commiserate with how gold moves, is a smart move because miners will benefit from gold prices. But please do honor your stop losses and try to buy a better price, or honor your stop loss, get a better price higher that has a higher uh, confluence of moving upwards. So if you want to sit and wait and see how gold reacts prior to getting into a miner, that may be smart. As we look at HYMC, the same thing. It's sitting right in the gap and buy zone with that. If you think 4,000 holds, HYMC is a buy at its current pricing, and then have a tight stop loss just outside of this gap in case 4,000 collapses, which will also drop both HYMC and Ego. We're right where we need to be, so make sure you have a protective stop loss in case it goes against us. Silver, you can see I have on the chart marked two critical areas, the all-time high anchored VWAP, which is currently at 75, and the buy zone that I've talked about for over a month at 54 to 56, where we were able to buy in and realize some profits. This is still the buy zone, but it's the same story with in silver that we have in gold. This, you can see market structure is very important. We may get a wick down as low as 45 to 50 where you'd want to participate if this zone doesn't hold, but the deceleration in silver is starting to happen and we might get it turned around. Silver is a great thesis, even though it's one of the most manipulated instruments out there, thanks to the CME. You can go Google that. It's a well-known fact. I buy physical silver all the time, and I'll be buying more in these prices. But we're looking for a bounce here. We did have some volume come in again on inflation fears being eased, and that 54 to 56 still is the buy zone. You could have a tight stop loss of $1 or two, try to run it back up to the all-time high. If it collapses, you lose $1 or two, and then you can buy it lower. But remember, if it starts going into money, please run to break even so you have zero loss in the trade. Most trading is running to break even, taking no losses and no profit to actually hit a good trade, right? And it can be discouraging, but psychologically, you have to understand break evens are a loss because most trading is defending your portfolio, not just making money. Platinum is sitting right in my buy zone, guys, that I identified before, kind of that 1,500 pricing range, as high as 1,600. You can buy anywhere in there. You can see that if we run back up, the all-time high would be at 1970. That would be a fantastic trade if platinum moves up, and then you can be protective because if that doesn't hold, we're going to see 1300. So that's why where when it's hitting this zone, it's very clear where you can put a stop loss. You put it on the lower edge of that if you are a platinum investor, because if gold and silver moves up, even though platinum is a separate instrument and different use case, it does benefit from the other metals moving up. So we're at or in pricing to buy platinum at its discount range here with a tight stop loss that is commensurate with your risk. Guys, I do risk management webinars. You can reach out. I can send you the links to those to where you can purchase those for a small price that you'll pay for many times over by just knowing how to risk manage your trade. So let's keep an eye on platinum.